August 9th, 2022. 40 years ago, the stock market in 1982 made its lowest price of 777 on the Dow Jones. So there's something interesting about the month of August and this period of time. I want to look at a couple of things. For the short-term traders, everybody wants to know what's going to happen now. And so what I think is that for this week, the market will go down a little bit lower until the 10th of August, have a rally till the 16th, but not dramatic, probably getting above the 4,200 level, which has not been reached, and then have a nice breakdown from the 16th to the 22nd or 23rd of August, finishing an ABC correction that started yesterday on the 8th. So from the 8th to the 22nd is a corrective wave. It's probably a fourth wave, which means it may not be very, very sizable. The last part of it, the C wave part of it, from the 16th down to the 23rd, is likely to be the most interesting and most profitable if you go short. And then we expect a bigger rally starting in the last week of August, starting between the 22nd and 24th, possibly the 25th of August, and sharply rallying until I think the 19th of September comes up. The 6th of September also comes up as a high point, but I think the 19th is probably a better bet. And so that's the short-term story. We go down next few weeks. We go sharply up into September 19th. We're looking at 44.75 as a target. And then the good stuff starts to happen. So for those who are wondering after the bullish tone of the last few videos whether I think we're in a new bull market, the answer is no. I think we're still in a bear market. This is a bear market rally. It will end in September, and after which we will see continued downside action going on from September until November, December this year, and then another rally till February of 2023. So if you're looking at it from the point of view, how long will the market hold up before it collapses? Probably until February of 2023, there'll be some sort of ebullient, some sort of upside. But the best place probably to go short would be in September, then again in February of 2023, and then the second half of 2023, we're looking at a big, big decline, probably taking out whatever lows we made in 2022. Okay. Now, to demonstrate and to show some specific video images that might be useful for you, we've located several markets that are in agreement, which are astrologically configured in line with the present day market. So there's not just an accident. It's not just they look the same, but they are likely to be the same. Okay? One of them is 75.6 years ago in 1945, and the other one is 48.9 years ago in 1972, both of which have been very similar to our present market for the last 18 months, and so there's a good reason to think that they are real. And they agree with each other very closely on the main swings going forward until the end of 2023, giving further credibility to the probability that that is indeed the path. This is indeed the roadmap for the future. Okay? Now, also aligned with those two, the 1902 market, the 120-year cycle, is also in agreement. There's a high in September, a high next February, and a low late in 2023. And 22 years ago, the 2000 market, which we've talked about, has a high in September 5th for that market, and then starts to break down, and it goes down until the September of 2023 equivalent when the 9/11 event happened in 2001. So that's our roadmap, and these pictures should demonstrate it very clearly. The first one you see the present market in red, back 18 months. That's the time frame that we're looking backwards. The second photo, if you take a look at that one, you're seeing an overlay in gray of the 75.6-year cycle on top of the red, which is the present market, again back 18 months, and then going forward till the end of 2023. And you note that there's a high point in September, and there's a second high point, a little bit lower, in February of 2023. That's the anticipated roadmap. This next chart, we see again the 48.9 year cycle, a little less than 49 years ago. Again, back 18 months with our present market in red, and the 49-year cycle is the other one. Okay, just to see that they have been the same, to show that there's some overlap. And then in our next slide, you see the three together. You see in our red, the red is the present 2022 market back 18 months, and the other two are the 75.61 year cycle and the 48.9 year cycle. And see how they agree with each other going forward. They both have highs in September and highs in February of 2023. And then toward the end of 2023, they both really come down hard. And that price doesn't necessarily have to be equal to 2022. It could be lower. It's not clear from the picture. But that's our long-term roadmap for the next year and a half. And you'll note also that before the high in this year in September, there's a little dip. It shows up as a tiny little dip in August. And that little dip is the decline that we're looking for right now, between now and late August. And it shows how small it is in relationship to the rest of the story. It's not a huge thing that we're looking for. If you want to go short, you got to be very careful and ginger about getting in and out, and make sure that you get out quickly, because once it reverses off of the low late August, it will shoot up again, making new highs and making that short useless. All right, that's our short-term and intermediate long-term story about the S&P, and we wanted to show it in because now people have been questioning whether I'm bullish. I am bullish, but only through till September. And in one statement I made that the market has a lot of time before it goes down. That is true, because it's conceivable it'll hold up all the way until February before it really falls apart. So if you consider the dip from the anticipated dip from September to December this year, yes, it could be there, but it may not be dramatic enough to take out our lows by much. And it isn't the main point. The main point is that it's going to rally back up again in the beginning of 2023 if this pattern continues, and then the real good short starts in 2023. Alrighty? Alright, thanks for watching. If you've been enjoying these videos, let us know with a thumbs up. If you haven't subscribed, please do. That way you get these automatically whenever they come up, the minute they come up. We would have liked to have made this video 2 days ago. We were correct about thinking that the 8th through the 10th would have been a low point, but I didn't say that early enough. But we are thinking the market will go down another day and a half into the 10th and then start to go back up again, possibly into making a slightly higher high above 4,200 by the 16th of August. All right, thanks a lot.